let's get you the mood check as markets opened just a few minutes ago. As again, like we saw yesterday, there seems to be a flat trading day for the markets. The markets seem to be completely unfazed by what is happening on the border. Sensex Nifty red, if you can call it, but second decimal points just 0.02% down. Sensex still holding well above the 80,700 mark. Nifty 50 above the 24,400 mark. Volatility as expected in the markets is a little high in early trading hours, but remember, all this could change as hours go by. Joining us today is a very special guest. Feroze Azeez, Deputy CEO, Anand Rathi Wealth, joins us this morning. Feroze, good morning. Interestingly, I was reading a report by Anand Rathi Research, which very clearly tells us that Indian markets seem to be completely bulletproof. Let me take you, I'm sure you've read this report if you haven't already contributed in great magnitude to it, but just look at the salient features of that report. Sensex was up 106 points yesterday, Nifty was up 35 points yesterday. Markets have been resilient no matter the tensions. Indices since the Pahalgam attack have been up about 1%. Past conflicts have had limited impact. Domestic macro sentiments seem to be driving the markets. Corrections have been short and sentiment driven. Investors focused on fundamentals, their earnings and liquidity drive market and not borders. And in the past, we've seen quick rebounds and no real structural impact. Now, your report also says, Feroze, that average correction in tensions has been just about 7.5%, and a war-like scenario may take it on the outside to about 10% or so. Also, interestingly, India has outperformed the S&P 500 in crisis-like situations. Interesting research, interesting pointers coming at a point like this. So, I want to begin first by asking you, Feroze, the Pakistan stock market, the KSC 100, is going through pretty much the same turmoil and the same stress that perhaps the Indian market should. What is making Indian investors and the Indian market so resilient?
Kartik, good morning. Like you rightly pointed out, data clearly points out that, especially now, if you go by the India-Pakistan tensions, there were 4-5 instances where the mean and the median correction was just about 3%. By the time on the first day, second day, there have been more corrections than yesterday. But over a period of the full conflict or the high heated zone of time, markets have recovered and they've just been 2-3%. And this time also it has been like that. Now comes the question, why so? See, what happens is generally a news determines its power by the time it comes. Now, let me give you an example to break it down for an investor. Satyam fiasco broke out in the early 2009. On that day, you would be surprised, one of the largest companies in India is declaring that we fraudulently reported our balance sheet fixed deposits. That, in my mind, was one of the biggest shake-up, and FII should quit India because it can't trust any of the top companies also for something so trivial like a bank FD. On that day, you'll be surprised, Sensex fell 1.5%. Okay. And then I started doing this research. Why so? On such a big news, how can Sensex fall 1%? That's because it succeeded a global financial crisis.
That's right, already the subprime crisis of 2008.
Yes, 18,000 Sensex had already come to 10,700. If the same news would have come in September 2008, this news had the power to pull down the market by 10%, 15%.
That's right.
So it's
so
not
are you suggesting, Feroze, sorry to cut you short, but are you suggesting that news on India, UK, FTA and the other global cues that we are picking up, India continuing to be the fastest growing economy as per IMF and Moody's, and of course, India looking at becoming the 4th largest economy by end of this year, are all these positive cues offsetting the potential negative impact that we could have otherwise seen on the basis of escalation on the border?
Yes, Kartik, but that's part 2 of what I was trying to get to.
Okay,
one is fundamental. The other is demand and supply. See, on a daily basis, fundamentals don't play out. What plays out is who has come to sell, who has come to buy. Are sellers more desperate to sell, or the buyers more desperate to buy? That will determine where the price settles.
Right.
So first, on the demand and supply bit, since we have already given away 4 lakh crores to FIIs on the pretext of valuation, there is a lot of selling already done. If this news came in July last year, this news could have given you a 5-7% on a specific day because FIIs were still to sell. We've already sold it. Now coming to the fundamentals don't play out on a day-to-day basis. See, because in the market every day, the amount of money which comes into the market is equal to the amount which goes out. So how many of our purchases, how many ledgers got debited and monies went to another seller? That amount of stock comes and that money gets credited to the seller. So money in and money out is equal on any given day of the market.
That's
It
the
depends on
equilibrium.
who is more desperate. Is
Right.
the buyer more desperate or the seller? From a
Absolutely.
fundamental standpoint, like you rightly said, Kartik, there are so many good newses which are offsetting this news on a 15-day, 1 month, 2 month basis. That determines the rebounds. The rebound depends on fundamental. The fall depends on demand and supply. That's when you see the Trump trade war didn't have a long-lasting impact on Indian markets because the fundamentals supported and sanity prevails, and then buyers over the next 10, 15 days see that as a buying opportunity rather than a selling opportunity. So I think you're so right. If you see the GST numbers, 2,37,000 crores,
Yeah.
the highest ever in April, 13.7% growth in direct tax collection, inflation at 3.6, the real GDP of the last financial year of 6.6, which is estimated after the fourth quarter comes in, on a
Yeah.
base of 9.2 of the previous year. So all these have contributed to rebounds. And one more very important demand and supply, which is there is limitation on the short. On any bad day, if my short limit is limited, if I can only short 2,25,000 Nifty, and I can't sell more calls, I can't buy more puts, I can't sell futures beyond 2,25,000.
Yeah.
Each individual in India has that limit, and people have already exhausted that limit. So where will fresh shorts come from?
Fantastic, Feroze. That's the best masterclass anybody can expect. A 5-minute masterclass on why Indian stock markets seem to be bulletproof in this volatile and uncertain times. But Feroze, I want to understand from you, if tensions were to escalate and if we were to see retaliation from Pakistan and some sort of a longer-term skirmish, if not an all-right war, was to ensue, what happens to global investors and global investors' sentiments looking at investing in India?
I think global investor sentiment, see, there are three kinds of FIIs. FIIs who are index fund investors, they invest on behalf of crores of human beings. That's one category. They have not sold India at all. They have just bought India over the last 2 years, and there's enough
Right.
evidence. And if you go threadbare, who are the vanguards of the world? Anybody who's following MSCI Emerging Market Index or the India Small Cap Index has only bought.
That's right.
Ikka dukka, some people would have sold because of redemptions. Now, so that's one which is not going to be quitting India anytime soon unless their investors quit their funds, which is not happening just because there's a conflict between India and Pakistan. So that's second part, are those investors who invest in index, but they invest on their own behalf. Like quite a few US institutions, like the Harvards of the world, have their pension funds invested in emerging market index, if you look at their reportings. So that's the second category of FII. The third category of FII, which is the most fluid money, which is the hedge fund investing, that has 80% quit India. That's my estimate. So if you break down FII, which is called FII, all three have a very, very different behavioral pattern. So to come back to your question, what will happen to FII sentiment? The FII sentiment is already dampened, and the hedge fund guys, there are quite a few, there are about 12, 15 who are very, very popularly known for trading stocks, not holding and buying stocks. They are very live today. I think the second category, which is investing on their own behalf in index, is also redeeming. But the index fund investors like the vanguards, if you see their reportings in the UK, you will be very happy if they follow FTSE, that they have not sold one share of India.
Fantastic. So that is the mood that can be expected from FIIs going forward as well. I want to quickly pull up the Nifty 50 heat map, Feroze, and get your views on, despite the markets being mostly flat, there seems to be some pressure today on specific stocks and big pressure. HDFC Bank is down about 1%, Maruti Suzuki is down about 1%, ITC is down about 1.2% or so. What are you making of these sudden falls in some of the very, very specific stocks, even though the overall mood of the market seems to be flat?
I think these are all capital allocations
Okay.
changes. Now, if you see, the banking space has been little resilient, but 9 banks have declared their results. 94% of the Nifty bank has already given results. The results are 3.9% weighted average so far, 6 more percent to come. So you will end up at 4% earnings growth for Q4. The fee incomes have also taken a hit. So I think there is some degree of capital reallocation, because at an index level, if you see the index today is down 30, 40 points, which is probably not even 0.1, 0.2%.
That's right.
But there's a lot of inter-Nifty movement happening. That's
Right.
point one, because there are some surprises, especially in result season. This kind of capital changes happen when people are disappointed or have their results estimates not being met. So that's one thing which happens, especially in the first 2 months. And the June month is going to be a little slower in terms of recheck. That's point one. Point two, if you look at today being an expiry, of course, a weekly expiry, you see the straddle is practically at no price, 50, 60 rupees on a Nifty. That means
Right.
you're going to get a flat day today. So
Right.
I think it's more inter-Nifty capital reallocation during
Makes sense.
earnings season, which is always seen.
Fantastic. Well, let's leave it at that. Feroze, Azeez, thank you so much for your inputs and the value that you bring to our viewers every time you're here on the channel. Thank you so much for taking the time and being here with us on Newsline.